Hi everyone, welcome back to my channel. Stocks are always moving up or down because of buying and selling patterns. In this video, I will be sharing a few factors that could have an impact on the share prices. I will also be using an illustration to help you to better understand how to identify these factors. First factor is company news. Any news surrounding a company, be it expected or unexpected, can cause movement in its share price. For example, news on a new product launch will send the price rocketing, or the death or departure of a key person in a company could all lead to swings in demand and share prices. Second factor that could impact the share prices is performance-related stuff. As listed companies will have to report their earnings every quarter, investors pay a lot of attention to these earnings report during this period. Earnings report that reveal significant profits, missed targets are circumstances that would influence the share prices. Economic factors including interest rate changes, financial outlook and inflation might affect share prices as well. If the interest rate and inflation go up and the economic outlook is poor, demand will usually decrease and the share price is likely to come down. Of course, this also depends on the industry which the company is in. Hence, this is why it is important to understand the company you are buying in. For instance, industries that are recession-proof will still do well during recession. Examples of recession-proof industries are grocery stores, certain F&B, because everyone still needs to eat no matter whether is there an economic recession. Share price can also be affected by industry trends as well. Companies in the same industry often perform similarly and are subjected to the same pressures. When an industry is booming, share demand in that specific sector will often increase, pushing share prices up. It's also possible for demand of one company's shares to increase if a competitor is doing poorly. Unexpected events such as natural disaster can cause business disruption, thereby affecting share prices. For instance, in late 2019 to early 2020, when COVID-19 virus hit the world, the pandemic caused the stock prices in many affected sectors such as the tourism and hospitality industry to plunge because business disruption would affect earnings. Market sentiment refers to the overall feeling that traders have about an asset. Understanding market sentiment can be a powerful tool for an investor. It can often be purely psychological, as investors are influenced by the moods in the markets instead of concrete news or figures. It can also be quite subjective and assumptive, but can be used to form fundamental and technical analysis to estimate changes in the share prices. Last but not least, political risk could also affect share prices. This is a risk an investment's return could suffer as a result of political changes or instability in the country. Instability affecting investment returns could stem from a change in government, legislative bodies, other foreign policymakers, or military control. For example, in the year 2016, in the lead-up to the announcement of Donald Trump's victory in the presidential election in the USA, the futures market of the S&P 500 index, which was closed at the time, sank 5%. It was only after when the news were gradually digested by the people and by investors, the index reversed all its losses and even posted a gain the next day. Let's take a look at an illustration. I've chosen Alibaba Group Holding Limited that is listed on the New York Exchange. Okay, this is just for an illustration purposes. I'm not trying to promote you the stock, but if you are interested in the stock, please do your own due diligence. Early January 2020, Alibaba stock was at all-time high before it took a plunge during the period whereby the COVID-19 pandemic started to widespread around the world. Over a span of 2 months, the share price plunged about 20% as everyone starts to worry about the implication of the pandemic towards the company's earnings. Let's take a step back and understand the background of Alibaba. If you're unfamiliar with Alibaba, it is a big data-centric conglomerate specializing in e-commerce, financial services, and logistics. Taobao and Tmall marketplaces can be considered as Alibaba's core cash flow drivers. Taobao and Tmall marketplaces generated gross merchandise volume of 6.6 trillion Chinese yuan, which is equivalent to $1 trillion in the year ended March 2020. This is more than Amazon and eBay combined in 2020. The reason why the share price took off after March 2020 is because during the pandemic, as people prefer to stay at home as it is safer, they naturally resort to online shopping. As a result, Alibaba's revenue increased at a very high rate in 2020 and 2021. If someone who invested in Alibaba without fully understanding the company might have sold their stocks during January to March 2020 and would have missed the profits when the share price recovers back shortly after March. You may be wondering if the company has so much potential. Okay, instead of a steady upwards trend in the share price, why are we seeing the price plummeting during this period? Well, in 23rd October 2020, Jack Ma, who is the founder of Alibaba, publicly criticized his communist government, and China government cancelled the IPO of Ant Group. Clearly, the China government is holding grudge against him. After which Jack Ma went missing for 3 months, and there were a lot of controversies as to what had happened to him. As Jack Ma is a key person in Alibaba, the share price took a hit when his whereabouts was unknown to the public. The share price, however, went up after he reappeared 3 months later. I think Jack Ma has learned his lesson. You should never offend a communist government if you are in a communist country. The outburst of the share price didn't sustain for long. In 2021, China cracked down big tech firms, driving most China tech stocks southwards. Besides some penalties and fines, Alibaba was not greatly affected as compared to other big tech firms such as Tencent. Main reason being the core business of Alibaba is the online retail, and we didn't see any major crackdown on that yet that would fundamentally affect Alibaba's earnings. So within 2020 and 2021, there were a lot of factors that caused the roller coaster in Alibaba's share price. Investors are starting to have their concerns over China stocks based on the simple fact that Alibaba is a Chinese company and China is a communist country. After all, no one can predict what the government would do to the company. But in conclusion, from this illustration, out of the 7 factors that could cause the share price to fluctuate, which I shared earlier, there are 5 factors that have resulted in the fluctuation in Alibaba's share price between 2020 and 2021. That is unexpected events, performance, company news, market sentiment, and last but not least, political risk. So should you be concerned about how markets move? Well, if you are a short-term investor or a day trader, you might want to pay extra attention to these short-term fluctuation factors on a daily basis. However, if you are a long-term investor, you should not be overly concerned by short-term market fluctuations and tempted to make adjustment to your portfolio every time there is some new information in the market. That said, you will also need to have a good understanding of the stocks you bought so that you can make the wise decision amidst these fluctuation in prices. Because if you are unfamiliar with the stocks that you bought, and when the price suddenly plunges, it's very likely you are going to panic sell and incur losses. You might have heard from a lot of people about buy low, sell high. However, this is not the only way to strategize your investment. Often than not, some people are too focused on achieving this buy low, sell high concept and may end up losing the real opportunities because it is impossible to time the market. Quoted from Warren Buffett, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. I hope after this video, you have a better understanding of how to identify the factors that could lead to the fluctuation of the share prices and decide for yourself how these fluctuations in share prices will affect your investment decisions. If you find this video useful, please click on the like button so that it can reach out to more people. Thank you for watching. Bye!